Welcome to the STR Data Lab.
Hello and welcome to the latest edition of the STR Data Lab. I'm Jamie Lane, Chief Economist at AirDNA, and I'm joined again by my trusty co-host, Scott Sage. Scott, you're in a new location. Where you at?
This should look familiar, Jamie. I'm at AirDNA's headquarters here in Denver, Colorado. And you know what? It's interesting, Jamie. I think you know this. Typically, when I come to Denver and visit the office, I like to stay at a Sonder. Not the case this week. Not the case. Big news with Sonder. What do you make of it?
So for those of you who haven't head under a rock, you might have not heard that Sonder essentially is filed for bankruptcy. They're going to be winding down operations after 11 years of operation.
After an unsuccessful partnership with Marriott.
Yeah. So it's interesting. There were so many companies sort of started around the same time, like AirDNA in 2014, Price Labs in 2014, Sonder in 2014, Guestia in 2013. Like this was like that emergence time of like these professional companies that were sort of going to level up the industry. And Sonder was like the darling of professional operators, like had the hotels sort of industry sort of shaking in their boots that this company was going to do not only asset light, but like employee light. Like they were going to be able to come in, take over these buildings, only do cleaning like after the stay, not have people on site, no front desk. Like you have to use a code in their app to like get into the units. And it was going to create a whole new realm of hospitality. And then it was such a surprise when we saw them partner with Marriott. And it was clear that it was sort of a lifeline for them of like Sonder was running out of money. They needed a way to not only get more cash, which Marriott provided, but also a way to drive incremental bookings. And they thought they were going to get that by launching within Marriott and making their units bookable within Marriott. And yesterday they shared in their sort of release related to it that when they launched within Marriott, they didn't see that subsequent increase in bookings. They actually saw a decrease in bookings, and they ended up cutting rates and weren't able to generate enough cash to keep operating. And the biggest thing for me, and I'm interested in your opinion, Scott, is like maybe a Sonder pre-Marriott, like you'd like might leave guests like stranded, like with 12 hours to check out. But for a global company like Marriott that's got hotel listings in every single one of these markets that Sonder's operating in, that they didn't have a sort of broader plan to like rehouse guests, put them in different units, like and sort of left them stranded, and seemed odd.
Yeah, I mean, look, it has downstream effects and like damages the Bonvoy brand for anybody who booked through Bonvoy. Look, I think a lot of people, that's one of the reasons I actually liked staying in the Sonder is I could pick up Marriott points in doing so while also feeling like I was staying in a short-term rental for an extended stay. But yeah, like luckily I was fortunate enough that I wasn't canceled mid-stay. But had I been, that reflects poorly, not just on Sonder, but on Marriott as well. So it is surprising on how it was handled. I mean, curious if you think it's surprising at large when we've seen a lot of these, call it master lease, hotel style short-term rental companies have struggled over the prior 5 years.
Yeah, no, it's a clear and shot across the bow for the rental arbitrage model. And Sonder was one of the last companies sort of still afloat. And when you think back to sort of pre-COVID with the front desk and Sonder, Domio, Wanderjaunt, Stay Alfred, Lyric, and Sonder was the only one still standing. And now none of them are really still standing. Like we still have Menthouse, we still have Casa. But what you see with them is they sort of embrace the management fee and more akin to a hotel model than the rental arbitrage model. And I think they all tried to switch to that management fee model as quickly as possible, but still not able to overcome and the sort of cost structure. And then also, like we shouldn't sort of put light on just and how the industry is still performing. Like overall short-term rental demand and even hotel demand in most urban markets is not back to 2019 levels. Like occupancy, and the only location type for that we sort of break up the country into that's not sort of at or above pre-COVID levels is urban. And then with what we saw on inbound international, which, and we talked about it extensively on the podcast this year, and foreign travelers just aren't coming to the US. And when foreign travelers coming in, like they're not going to beach and mountain markets, they're going to the city. They're going to the urban core. And I suspect a lot of them were booking Sonder properties. And this summer we saw a 16% decrease in international inbound demand to the US. That stayed in short-term rentals. And that had to have had sort of a incremental impact too on
It
their
al-
ability
yeah,
to.
it also speaks to the trend we've been talking about for this full year, and maybe the past 2 years, which is what we hear now being called, right, the K-shaped curve with luxury or more affluent consumers. In our industry, it's the luxury travel that has been continuing to grow, whereas the mid-scale and economy has declined. And these operators operate more in that bottom market. And so maybe the writing was on the wall, but anyway, you never want to see that in our industry, but so it's disappointing. It's disappointing how it ended, but not all bad news, right? There's a lot going on in our industry. Jamie, you just got back from Rome actually a couple weeks ago, VRWS. Well, any takeaways you had from that conference?
Yeah, I'll tell you, Scott. One, it was great to be able to go to Europe for a work conference. Like as you're planning conferences for 2026, we could think of some more great locations like Rome. I'm down. I know that conference, the RWS, Antonio puts on an amazing show. It's going to be in Lyon, France next year. So hoping I get to go there. But I tell you, Scott, like I was hopeful going in that I was going to have an audience that was feeling good about industry performance and the overall economy. As you look, because I'm not, and obviously I'm not European. I don't live and work in Europe, but I'm analyzing the data. I did a lot of deep dives into the data, and things in Europe are actually looking pretty good. Like Americans are traveling overseas at record levels. We saw that increase another 8% this year. Unemployment in Europe is at all-time lows. Wage growth is pretty strong. Occupancy has continued to outperform in Europe. Like supply growth is relatively low. Like things are looking objectively pretty good across most European markets. And then like I did my thing where like raise your hand if you're feeling good about the economy and short-term rentals. And it was a room of 750 people. Can you guess how many people raised their hand?
7.
It was 3. Yeah, so I'm still a lot of pessimism out there. And you still see it. And you see it in European and sort of US sort of consumer sentiment surveys.
Jamie, let me pause you there. What is the driver of that? Like, does anybody ever feel good about the economy?
Yeah. They do. And that's what I was going to say. Like the Michigan Consumer Confidence Survey came out earlier this week, or I think it was last week. It was almost at an all-time low. So like you look at jobs, you look at the stock market, you look at the crypto market, like all these things are sort of flashing like and doing pretty well. And you look at sentiment and it's like people are in the doldrums. And it does go back to and you mentioned the sort of K-shaped economy where those that are the highest end of the income spectrum are feeling really good. Their stock market's at all-time highs. Like it's not a ton of percent of the population that's actually invested in the stock market, investing some of these alternative assets, has the ability to invest in real estate. And then you look at the lower income, like inflation is still abnormally high. The wage growth that people are seeing is not sort of in many ways keeping up with that high inflation.
Housing affordability is
at all-time low. People feel like they can't make ends meet. They can't change their station enough to I see those increases. And then I don't know if this is true or not, but I hear it in some of the groups I'm in, like that the advent of social media and it feels like you're always seeing like someone else's and other best life and the impact that that can have on even if you're doing well, it makes you feel like you're not doing as well as others.
Interesting. Yeah, look, I mean, it's an interesting takeaway that that's common. You know, we did this in Breckenridge, you did this in Las Vegas, and you did this in Rome.
I'll say like I've been doing these presentations now for 15 years. Like this year and last year are some of the first years where it's been like everyone feeling bad. Like usually I get when I ask that question in a room, it's like half and half. And like I can very easily tell like the one half of the room what they're feeling good about, the other half of the room what they're not feeling great about. And but this is the first time where it's like no matter who it is, like everyone's feeling I'm pretty bad about the outlook of the overall economy and in the industry.
Well, why don't today we spend it looking backwards? So we'll look back at the month of October and look at U.S. performance. And maybe, Jamie, we start with the basics. Let's take a look at supply and demand. So what did we see in listing growth and bookings volume for the month of October?
Yeah. So for operators, it's another sort of positive month on listing growth. So overall in the U.S. in October, we saw listing growth of about 3%. That's slightly higher than what we had been seeing during the summer of growth around 2%. And then I'm essentially right on sort of full year average of around 3%. So we're still very much in a low supply growth environment. And we expect that to continue. So now keep that 3% sort of roughly supply growth number in your head. And we talk about demand growth. So if you remember, Scott, we've been talking about how there has been some overall weakness in demand this summer. Last month, there was sort of a calendar anomaly with sort of Labor Day shift, one of the days into August where demand was flat. We did see overall demand growth in October about 2.5%. And I had said like, well, let's average the August and September number. That gave us 2.3%. So 2.5% is roughly in line with what we had been seeing this summer, but it is below the rate of supply growth. So that does mean that we saw an occupancy decline, another month of occupancy decline in October of about 1.5%. So not great, but could be worse. When I say could be worse, we've been tracking what's been happening in the hotel industry as well. Overall demand actually declined in October about 1.5% for hotels. And combine that with supply growing 1%, that's an occupancy decrease of like 2.5%. And I'll say in a lot of markets for both hotels and short-term rentals, we are lapping the impact of Hurricane Helene, which we saw really impact last October. It sort of hit at the end of September. And there we saw a lot of people displaced, both in Florida and all the way up into Georgia, North Carolina, Virginia area, which severely sort of grew occupancy in those areas. It also led to a pretty serious decline in available inventory in a lot of markets for short-term rentals. So that clearly an impact that we're lapping some of those year-over-year comparisons.
So the Southeast and coastal felt the impact there from the hurricane. Any other market anomalies or takeaways or trends we should be looking at when we look at, because that's, the numbers you just quoted, national averages.
Yep.
What else, if we look at mountain markets or urban, what did we see there?
Yeah. So when we look at different location types, unlike this summer, where coastal was the only sort of group that saw occupancy increases, and it's like, and it was a domestic travel summer, everyone was heading to the beach, and they performed relatively well. Like coastal was up relatively well. Occupancy in coastal this summer was up 0.3%. All location types except Mountain saw an occupancy decrease this October. So what happens in the mountains in October?
Shoulder season.
And it's leaf peeping time. The leaves don't change in San Francisco, do they?
Not like the mountains. There's no leaf peeping in the Bay Area. Let's put it that way.
Yeah. So like this summer, leisure travel sort of heads to the beach, and we have seen quite a bit of pickup in especially some of the East Coast mountain regions this October. So we actually saw mountain lake markets in October occupancy up 2.3%. Coastal was down 2.4. So definitely some weakness, and then all other location types were down as well. So definitely some weakness out there on occupancy. On the demand side, every location type saw increases. And so this is, it's not less people staying. There is, and the impact of supply and that it's having on overall occupancy.
What happened to rates in October?
Yeah, so rates increased. We saw an overall ADR increase in October of 1.7%. That aligns with what we saw roughly in Canada and Mexico as well.
Jamie, I want to clarify something for folks listening and for my own knowledge. That does factor and takes into account, the Airbnb forced change, for example. So a percentage of Airbnb hosts likely marked up their rates to get to the single service fee on hosts. So does the rate change you are calling out factor that out?
Yeah, so it does. So we track every listing and what service fee they have. We track when they change their service fee and what the impact of that is. So I wouldn't expect it to really show up in the October numbers because the change happened on October 27th. But what we did see was about 445,000 listings in the US have their service fee change from 3% to 15%. And then what we didn't see was 445,000 listings increase their rates to offset that 15% increase. So I'm actually really interested to see what happens to overall rates in November. And it is a relatively slow month for most markets. So most beach markets, and even ski markets, like you're not open yet. So, and it's one of the lower months for overall demand. And it does sort of pick up around holiday season for a lot of markets. But if you didn't change, I know we did a PSA on the last episode, but if you didn't change your rate, this is your reminder. A lot of your friends didn't change their rate either to offset that fee.
And maybe said differently, we expect to see ADRs and rates in November and call it even December reflect growth because hosts are increasing their rate to offset the service fee.
No. So what I actually expect is that because we report rates without the service fee, that now the take-home amount for most hosts is going to be less because they haven't increased their rate to offset that fee. So I suspect we actually see a overall rate decrease in November and December that reflects that people weren't offsetting that because whether you're offsetting it or not, if your fee changed to 15%, we're now reducing that the sort of revenue that we see a property earn by that amount.
And I think that's a very important distinction, just as almost a reorientation and reminder on how we track and collect data, which, Jamie, maybe is a nice transition or segue into we've made some updates at AirDNA with our data modeling and how we provide data. So what are you excited about? Maybe give an overview of what has changed, what's new, what you're excited about, and when you get into the app, what you can expect to see.
Yeah. So we did update our few of our underlying data models. So it's something that we're constantly evaluating, upgrading, and making changes to. I'd say this change was bigger than most, as we touched Some of our key ones, like our biggest one is determining whether things are a booked versus blocked night. And maybe counter to some a narrative out there, it's not just that we see a night go unavailable and we assume it's a booking. We actually look at all bunch of behavior around, like, what is the lead time, what is the length of stay, and what is the activity that we're broadly seeing in that property, what market is it in, and a ton of information goes into that model. And we did update it. One of the outputs too is we really wanted to get better at modeling longer term stays. And that is one of the hardest aspects of sort of data modeling to get. Like when someone goes in and blocks off 2 months or 3 months in their calendar, is that because someone booked a 3-month stay, or is that because you just always block out your listing in the winter? But we were able through machine learning to like really and figure that out. So I'm super excited that we can sort of report on longer term stays now. We were under reporting revenue for a lot of those listings that were generating longer term stays. That was probably one of the biggest underlying inaccuracies around our data set. And now that's fixed. And then the other one, and this is super nerdy, Scott, is we rebuilt our matching models from the ground up. So one of the big benefits of AirDNA's data is we take a holistic view across the ecosystem. Like we're going to show you Airbnb listings, Vrbo listings. We've got booking.com listings coming in. And we have to make sure that we're not showing duplicate listings that are sort of showing on multiple platforms, because then we'd be over sort of estimating industry supply. And we had a matching model. It was good, but with modern techniques and the ability to sort of analyze photos and sort of do it at scale, we wanted to take a new approach to that. And we sort of built that new model and have that in market now too. So in some markets, you might see a slight decrease in overall listing counts. And a lot of that might have or has to do with us sort of improving our matching across platforms.
Not nerdy. Important is how I would name that, Jamie. And extremely important because underlying this is confidence in the data we see within AirDNA's projections or Rentalizer or any other way you're using the application. And so kudos to you and the team for, you called it out, right? We've been doing machine learning at AirDNA before machine learning and AI was even cool.
Yeah.
And so you don't hear us tout and preach AI all the time because it's just innate to our data models. It's like it's built in the infrastructure layer of what we do. It's not a buzzword for us. It's just what we do. And I think it's really cool to see the improvement. And when I get in the app and when you get in the app and when listeners get into the app and see the data, the confidence score and what you're looking at is much higher. So a lot of great work, continuing to innovate, continuing to change. We have some exciting new releases ahead, and this is the foundation for it.
Yeah, and it goes back to, in talking with clients, like the reason why they're AirDNA subscribers is because of our data accuracy. It's because of our history of having accurate data, and we're committed to that going forward. So we've got a huge data science team. We have a huge data acquisition team, and we're having to make changes on a day-to-day basis, based on platform changes that we see and across Airbnb, Booking, and Vrbo. And we're processing, and we do about 60 million scrapes a day across those 3 platforms. We're processing about 1 terabyte of data a day. So it's a huge operation. And to get ultimately down, like most people are looking for us to give them one number, and just knowing that there's so much effort that goes into generating that one number. And huge props to the team. And for one, being able to track our accuracy, 2, being able to understand where are ways that we can improve, and then coming up with a plan and like implementing that plan, and then doing it all while we've got so many other things sort of in process, sort of making the app better. It's fun to see, and huge props to the team for getting it out.
Well, maybe that's a good place to end with a nice little teaser that there's a lot more exciting things coming out of AirDNA shortly. Jamie, really appreciate the insights as always.
Awesome. Thanks, Scott. And thanks, listeners, for joining in.